All right, Wayne Bettis here, the founder of the Off the Tools podcast. I just want to introduce you to our brand new sponsor, directplumbing.supplies.com. It is founded by a former tradesman who has set up his own plumbing and heating merchants. He has an online shop, which is obviously at directplumbing.supplies.com, and he delivers across the UK. So sit back, relax, and enjoy the rest of the show.
Hello, everybody. How we doing? Right. If everybody could just mute themselves for the first little part of this, we're going to kick things off straight away at 5:30. We'll have a good chat afterwards. So, if there's anything not about finance and what Jono is here to talk about, then we can discuss that later. But a few ground rules. If we can keep muted just for the first 5-10 minutes, let Jono introduce himself, tell us a little bit about what him and his company do, and then we're just going to open it up to a Q&A, because I know lots of you are either already offering it or want to offer it and have lots of questions about how finance can work in your business. Obviously, it is the climate out there at the moment is very, very changing. And when things are changing and there's lots of speculation, finance, in my opinion, seems to be something that people want to take up more. They might have the money, but they don't want to relinquish that money. So getting finance on products, cars and stuff like that seems to go up. So I think it's very fitting that it's a discussion for this sort of time. Hopefully you guys will find it valuable. But let me introduce Jono. Jono works for Phoenix. I've worked with Phoenix I'm one of their customers for a long time. So I've got first-hand experience of how it all works. But yeah, Jono, just say hello to the guys that are here and tell us, just kick things off, mate.
Well, nice one. Thank you so much, Wayne, and thanks for having me. I think what Wayne said is absolutely spot on. I think in times of uncertainty, finance seems to be where people reach, wanting to keep the money in their bank accounts. That's quite a good point. But my name's Jono. I work for Phoenix Financial Consultants. We're a credit broker for home improvement finance and services. So our journey started in the world of boilers. We saw a bit of a problem whereby boiler companies were maybe not able to compete with the likes of British Gas and things like that, where although your boiler would be significantly cheaper, if a customer could get 5 years finance, 10 years finance, they were going to go for a more expensive boiler and do it on finance. So that's kind of when we sort of saw this gap in the market, and we then came into it. So since then, we've grown into a number of different home improvements, from started with boilers, then kitchens, bedrooms, bathrooms, solar, renewables, insulation. I think we work across sort of 50 odd home improvement sectors to be able to offer finance now. So as a broker, we work with a panel of lenders. So it kind of allows access to a full panel. So if customers can't get one loan, we can sort of help them always find a loan. But essentially what our process is, we are directly authorized by the FCA. So we're a directly authorized firm with the Financial Conduct Authority. And we onboard companies as introducer appointed representatives of finance. So you will be, if you did ever want to go down this route, you become an introducer of finance. So there is a bit of a myth out there that to offer finance, you have to be directly authorized by the FCA. And you have to go get all of these lending licenses and things like that. That's absolutely not the case at all. You can piggyback off of a broker's permissions to then be able to introduce finance to your customers. So there is a subscription fee that we do charge, just because we have to do all of the due diligence and the compliance and all of the onboarding to get you onto the FCA register as an introducer of finance. So there's two options. We do a monthly subscription fee, which is £49 per month, or we do an annual subscription fee, which is £450 per year. No right or wrong way to do it, obviously. Like anything with the annual fee, there is a bit of a saving. But we just offer those two options because I appreciate that not everybody wants to fork all the money out up front. Once we've got all of that, we set your account up. It takes about 7 to 10 days to get you on board with the FCA. It can be a bit longer. For anyone who has ever dealt with the FCA will probably appreciate that. They're a whole bundle of fun, but they can take a bit longer. But on average, you're looking at about 7 to 10 days turnaround time. Um, and then once you're live, we reach out, we do a welcome call with you, and we show you how the whole Phoenix process works from start to finish. But effectively, what will happen is you will have access to your own Phoenix portal, which will have everything on there that you need, from your offer to your marketing materials. You can track the customer's journey through the loan application. But you populate what is effectively a quoting tool, just because we need to capture all of the information about the job. That will then send an email to a customer. They then receive a link, they click on that link, and they go through a self-application finance process. So you introduce it to them, and then the customer just goes through the rest of the application on their own. That usually takes them about 5 to 10 minutes. At the end of that, they'll get an instant decision. So they'll be told immediately whether or not they have been approved for their finance, and you will be notified as well via email. At that stage, it's just a case of contacting the customer, collecting any deposits that you've agreed with them, and then arranging a date to carry out the job. We just ask for 2 before and 2 after pictures. They will then get uploaded onto the Phoenix portal. The customer will receive a satisfaction note. They sign that, we pay you, and that money gets to you in 5 working days, and we then manage the loan relationship with the customer. So I think one of the other myths is, if you're offering finance, when we get the money, we drip feed it to you per month. It's not like that at all. We pay you up front, you get that money onto the next job. If the customer stops paying their loan, I'm not going to ring you guys up and say, oh, can you go and whip that boiler off the wall, please? They've stopped paying their loan. It doesn't work like that at all. The only thing, obviously, if there's ever any sort of particular issues with the boiler, we obviously just contact you regarding warranties and things like that. But it's a fairly straightforward process. I was just saying to Wayne earlier, it's really hard to talk about it for longer than 10 minutes or so in terms of the process. You log in, you send a quote, the customer applies for the finance, you do the job, we pay you, and so on and so forth. And I guess the benefits of offering finance and being an introducer is it does allow you to market finance. I know a lot of people say, oh, go get an interest-free credit card, or I'll tell my customers to go get a loan from Tesco's. Whilst I appreciate that, yes, some customers can get interest-free credit cards, it's not as simple as it used to be with the current climate. And also the Tesco's loans, yes, that's absolutely a viable option. I suppose the downside there is, with those sorts of personal loans, customers are getting money into their bank account. Suddenly they may get $3,000 into their bank account and go, oh, I'm going to shop around a bit, or do you know what, I can tough it out for the summer without my boiler. I'll just go on holiday or something like that. So there are pros and cons to everything, right? And I'm not here saying that our system is perfect and what we do is works for everybody. But I do think finance is quite important at the moment, just to sort of help customers, help you guys grow your business, and just sort of generate a few more leads in terms of something that you can market as a different payment option. I mean, the more ways you offer your customers to pay, I'd imagine it just makes it easier. It's just a benefit for your customers. So that's kind of that side. There are various finance options that we can provide you with. We have interest-free finance. We have interest-bearing finance as well. And we try and tailor it to suit you guys. Obviously, you make the decision as to what you offer on your account from what we can offer, and then that's what your customers can apply for. Now, again, the thing about interest-free finance is, unfortunately, there's really no such thing as interest-free finance. Someone's paying for it somewhere. Unfortunately, these lenders aren't lending their money for free. So there are subsidies on most of the finance products, but particularly high on interest-free finance. So, for example, our 12 months interest-free finance comes with a 13% subsidy. So what that means is, when we release that money to you, once the job's been completed and signed off by the customer, it's less 13% of the loan value. So it's just worth sort of just taking that into account. And that subsidy for interest-free does increase as the term goes on, just because it's a sort of calculation that lenders would make X amount of money over a longer loan. So it does go up to 18% for the 2 years interest-free finance. In terms of interest-bearing products, they are longer-term finance options where the customer pays an interest rate. They're over 3 to 10 years, so it really makes the product a lot more affordable if the customer wants to spread it over 10 years. There's three different options that we can offer. There's a 10.9% APR product, which has a 4% subsidy. There is a 12.9% APR product with a 2% subsidy, or a 14.9% APR product, which is subsidy free. So if you chose to go for that 14.9% product, you'd pay us £49 a month for your subscription fee and never pay us another penny, whether you do one loan, 100 loans, or whatever the case may be. But it's just really a case of understanding the balance and figuring out, can you increase your costs to cover potential subsidies? Can you, or did you just want to advertise finance and use it as a bit of a marketing tool, knowing that customers who would like to borrow money understand that there's an interest rate to it? So we work with you guys to try and make sure that the products that you've got on your account are suitable for you, suitable for your customers. And it's not a once and done thing either, you know. So if you start with just the 14.9 and you think, you know what, let's give this interest free a go during the summer, because that's going to hopefully generate a few more customers when it's a little bit quieter, then we can get it on there for you. And if you start with the interest free and the interest bearing and you need that gone, we can take it off. It's really just a case of us working with you to try and make it as suitable as possible for your business and for your customers. But again, I was just saying to Wayne, more than happy for you guys to have my mobile number and my email. We can arrange a call and go through all the details and all sorts of things like that. And it's, like I said, it's really, really hard to talk about this for longer than 10 minutes because it's really boring for a start, and it's really difficult to complicate it more than it actually is. But I'm sure what I've said would have thrown up a few questions. So if guys want to ask away, I'm happy to answer any questions.
Well, yeah, I'll kick things off because I've got a couple of questions from a few people that have come in. But firstly, you explained that much easier and better than I could have ever explained it. It's as I said at the beginning, you know, I use you guys, so I know how it works. It's really not complicated. But there was a few basic questions that I got submitted based off of what prompted us getting here in the first place from that thread. And one of them was, do you have to be a limited company to, and these are questions answers that I didn't know. Do you need to be a limited company, or can sole traders join you guys as well?
No, we can work with sole traders. Like I said, that's kind of how we started. We started to help small and medium businesses, sole traders and limited companies, one-man bands, etc., to be able to offer finance to compete with the likes of British Gas, for example. So no, we absolutely sole trade, don't have to be a limited company at all.
Okay, brilliant. And another question similar to that one was about VAT. Do you have to be a VAT registered company to sign up to you as well? Because some of the smaller businesses that reached out aren't VAT registered at the moment.
No, absolutely not. Again, you don't have to be VAT registered. We work with a number of different businesses who are VAT registered, aren't VAT registered, sole traders, limited companies. So no, absolutely not. That won't have an impact at all.
Okay, excellent. And then one last other question that I had written down that was submitted before was to do with the subsidy. And I know you said about what the percentages were, but the person in question asked, how is that subsidy taken? So do you invoice the company, or do you take it out of the money before you pay us, basically?
Yeah, so that's how it works. So once that we get those 2 before and 2 after pictures of the job, the SAP notes email to the customer and they sign that. We then authorize the payment, and that payment is sent to the chosen bank account less the subsidy. Okay. So it's not like it's not like a monthly invoice or anything like that. It's per job.
Okay, excellent. So that answered my 3 questions that I had written down. So I'll open. It looks like Andy's got his hand up. He wants to ask a question. Do you want to unmute yourself, mate? Oh, there we go.
Hi, mate. Thanks for the. Hang on, I have to swap routers in a minute.
Are you freezing there, Andy?
Right, hang on. Just do a quick router swap. The joys. Right. Thanks for that talk, mate. Appreciate that.
No worries.
So mine's a bit of a out there question. Do you offer a guarantee that you're not gonna sell on any customer data? It sounds a bit like untrustworthy, but it's the world we live in, essentially.
In terms,
Because obviously, so you're going to obviously have that customer's data, address, pictures of the installation.
yeah.
What's to stop you selling all of that data to British Gas in 5 years' time?
So GDPR regulations. So we obviously do capture the customer's data. Now we're a sort of one-stop finance company. So we offer mortgages, we offer car finance, we offer bridging loans, we do all sorts of stuff like that. So we do market Phoenix to those customers. They have the option to opt out. We don't market, we don't sell the data. That's not what we're not in that game. So aside from me just giving you my assurances, there's nothing sort of written down. But no, we don't sell the data to anybody else. We market Phoenix products to them because obviously everyone who does take the finance does have to be a homeowner. So naturally, for us to say you are a customer of Phoenix, we also offer mortgages. Are you interested? So the only marketing we'll ever do to your customers is Phoenix marketing, which they have the option to opt out of as well.
It's quite a good question, actually, Andy. I think were you like referencing a little bit to what Corgi did, where they had all the database of all the people's boilers, and when they lost the contract, miraculously, a home care company popped up out of the blue, out of the data, and that, didn't it?
That's obviously, I intend to build quite a large business over the next decade or whatever it might be. So that is a concern. I wouldn't want to have 500 customers on Phoenix Finance, and then you decide to sell the entire company to HomeServe or wherever it might be, and then that's it. Then all them customers get snatched.
So, I mean, we don't have any intentions to sell the company, but if it does ever get to that stage, God, I hate to think about it. I don't know what I'll do next, but a lot of my time's been with Phoenix. But no, if I guess if it does ever get to that, then there'll be some legal stuff, which is way too smart for me to even think about in terms of customer data. But as Phoenix, and whilst we're Phoenix, we don't sell or share any customer data outside of our organization because like I said, yeah, we've got a whole mortgage section which is Phoenix Financial Consultants as well, so it's within our own business.
Yeah, makes sense. Right, right. I think we can just open up now, lads. So, anyone else got any questions? Anything that they wanted to ask Jono while we've got him? Obviously, I don't know how many of you are offering finance at the moment, but yeah, open your mics if you do have any questions.
But yeah, there's nothing outrageous to ask. I mean, it's I appreciate that I do know that finance is sometimes a bit of a dirty word. I understand that there's a lot of sort of stigma around it. So again, if you don't want to ask it now, Wayne's just put my contact details in the chat. Drop me a text, drop me an email, give me a call, and you can spend as much time as you need to going through it all.
Yeah, I'll ask a question. Go on, Ben. You can go first. Go on.
Oh, cheers. I'm sorry, I missed the first section of the meeting. So the first few minutes. So, do you have a ongoing monthly charge or an annual charge for joining Phoenix, or is it that just you take a percentage from customers that we provide to you?
So we do have an ongoing subscription fee. It's either £49 per month or £450 per year. We just have to do a lot of due diligence and compliance and onboarding, and with regards to the FCA, which in the last sort of 18 to 24 months has become a lot more strict as well. So there's a lot of work that goes into the management of the account. So that's why we charge that subscription fee.
Okay.
Vinny?
Obviously, with what I do, the bathroom side of things, we usually split, just say for around easy numbers, our bathroom's 10 grand. at the moment where we work, we usually take 50% on day one, 30% after, say, like day 8, and then the final bit at the end. With how you do it, obviously, you've got to wait for the job to be complete. Is there a way where you could do at least 50% at the start, 50% at the end? Because otherwise, say like I'm say 6-7 grand into a job, hoping that they're going to tick the box at the end that approves that they're happy. Do you know what I mean?
Yeah, no, I understand that. So the maximum deposit we can take is a 25% deposit. That's paid directly to you once the customer has been approved for their loan. So it's a self-funded cash deposit. It is limited by the lenders. It is something that we're looking to increase just because there is a bit of liability that sits with the lenders and us as a broker with regards to deposits. So just say, for example, a company went and collected loads of deposits and then vanished. It's then up to us as the broker to pay all those deposits back. So that's why there's a limit there, up to 25%. So unfortunately, yeah, that's just that side of it. With regards to the satisfaction note, the reason we ask that the finance quotes are populated and introduced via our quoting tool, and we ask for those before and after pictures, is it means that if the customer is not signing the satisfaction note for no reason, we can see the before pictures and the after pictures. We can see that the quote's been fulfilled, and the customer's just ignoring us or just not signing the sat note, or whatever. We work with you to get you that money. So there's almost a little bit of an element of a different type of protection, I guess, on that side of it. So I do appreciate that, yeah, 20 when you're doing big jobs like 10 grand bathrooms, that materials and things like that cost a bit more probably than 25% of the job. So it's not something that we do at the moment. We are looking as well at it's not, I don't know when it's going to happen, but as in sort of staged release of money.
Yeah.
So various sort of SAP notes at various stages of the job, like you've said, 25, 25, 50 or 50, 25.
Yeah.
The case may be
something sort of like when people do, when people build their own homes from a mortgage, like they'll get X amount at that level, the bank will release more, and then the next stage, like when it's approved, sort of something like that. Obviously, you're not there yet, but I just want to put it out there.
But and it's a good question, and it's something, and like weirdly, it does come up a lot in bathrooms and kitchens as well. A lot of kitchen companies that we speak to get very twitchy about the low deposit, which I completely understand as well, and also the sort of stage payments. But it is something that we are exploring because it comes up a lot. It does come up a lot in terms of staged payments and staged releasing of money and things like that. So. But yeah, at this stage, unfortunately, it is the 25% deposit.
Yeah, cool. Thanks.
No worries.
So hypothetically, I'm not saying I've done this, but if somebody was to put, say, a £5,000 quote, but only want to do 3,000 through the finance company and take the 2,000 as a separate deposit, but only put 3,000 on your quoting tool and that gets fully financed, is that person breaking any rule?
Look, I know this has been recorded, so I just need to be really careful what I say. Look, obviously with the liability, right? The lenders are also doing they're doing like sort of dip test calls as well. So if they call a customer and say, "Hi there, this is who we are. We're the lender for your loan. Have you paid a deposit?" And they go, "Oh yeah, I paid them 3 grand," and it doesn't say on the application, they'll pull the finance. They'll just pull the quote, like no questions asked kind of thing, just because they need to track all of that. So the advice is just do it. Yeah, just do it properly. Now,
do it through the system
and track the deposits as well, because also you could have a customer who as much as there are rogue traders, there are rogue customers in my opinion. And if you get one customer who tries to play a bit of a game, if we've got all of the information on the system and something ever goes wrong, it means that we've got all the evidence to help fight your corner as well. If something ever does go wrong. So I'd always suggest doing it as best as you doing it as best as you possibly can, with everything on the system.
Okay. Yeah, no, I understand. That leads me. Sorry, please feel free to jump in, guys, if you've got anything to say. I'm making the most of this. If there was a problem, say in 2 years, right, and who's liable at that point? Let's say the job wasn't done 100% correct. Let's just say, because I know we're all perfect in this room, but some people aren't perfect, and sometimes mistakes happen. Where does the liability come? Like, obviously, because they financed the product, so I'm sure that the customer has quite a lot of protection in that from that angle, don't they?
There is a bit of that, right? So it's quite a difficult one because we've had companies that have gone into liquidation that obviously we then have to help the customer if there's ever any issues. Whatever contracts and warranties and anything that everybody's got with customers now, I would say keep all of those in place. So if you've got a 2-year workmanship guarantee, if something like if it falls off the wall or something, and the customer contacts us, first and foremost, what we do is we reach out to the trader to say, this has happened, can you go and check it out? If it's a manufacturer issue, then we just ask that they go down that route in terms of a manufacturer warranty. If it's a workmanship issue that falls within the warranty, then we sort of ask that's gone to rectify. If everything falls outside of the warranty, then it's no different to whatever would happen now if it's a cash payment or if it's a finance payment. I think that's the other bit that sometimes overcomplicate is that just treat finance as another way to pay. If your customers do call us with an issue, yes, we reach out to you first and foremost and try and help rectify it. But yeah, there are occasions where we have to step in and put our hands in our pockets. Now, not all the time. It's mainly around companies that have gone into liquidation, really, that we then have to support.
I think the angle I was pointing at, I don't know if I probably didn't explain it as well, but it was helpful there anyway. But like with the credit cards, you can get things called chargeback, can't you? Where basically the consumer who's paid with that credit card can put in a complaint, and then the credit card company can go, "Oi, Tim Dicker, take your money," and they take that money back off of you behind the scenes, don't they?
We can't do that.
Finance can't.
No, I can't just dip in. We can't just dip into your bank account and take that money back.
Okay.
No, we don't. We can't do that.
So to simplify it, it would be no different. You'd have just the same liability as if they'd paid by a bank transfer or whatever.
Yeah, that's exactly it. Yeah, that's exactly it. There's obviously still Section 75, which is the same with credit cards and things like that. There's all of those. If customers ever want to go down that route, because it's
like the consumer,
they can do that. But no, we can't. We can't just take money from you like a credit card company would, for example.
Cool. Yeah, that makes sense. Anyone else got any other questions before I fire another one at Jono? Sorry, I've got loads of questions.
No, it's all good. It's all good.
Yeah, just a quick one with fees and registration and that. I'm just a bit puzzled as to what's the difference between us saying like use Phoenix for your boiler install, or go to Capital One and say for a credit card, sign up with my link and we get £75 each.
There's no. I suppose the only difference by signing up with a company like Phoenix, you can then market the fact that you offer finance. You can tell customers that finance is available to you, and then like I said, we pay you, so the money goes directly into your bank account. Although the customer's taking out a loan, they never actually get the money into their bank account.
It sort of closes the sales journey, doesn't it? It keeps it in a circle without any sort of outside sort of influences.
Yeah, that's exactly it. There's so many options out there in terms of different ways to pay. And then this is just one of them. Obviously, I'm going to be biased and say it's brilliant. I do think it's important, and also I think if there's a few companies out there like us, I'd always say shop around as well, have a look what options are out there and see what's best for you. But yeah, the benefits of being an introducer of finance does mean that you can market the availability of finance
Yeah.
You're with us.
Brilliant.
Yeah.
Thank you.
No worries.
I've forgotten what my question was now. Oh, yeah. Actually, sort of selling it. So, what are we classed as? So, we're not FCA like registered, are we? If we like, so I'm signed up to Phoenix already.
Yeah.
So, what am I? Am I introducer? Is that correct?
That's correct. Yeah, you're an introducer appointed representative. Yeah, IAR. You'll hear all the different terms. So you're an introducer of finance. So there are a few limitations with it. For example, you can introduce the finance and you can market the finance. You just can't give any financial advice. So you can't say to your customer, "I suggest going for this longer term loan. I suggest doing that," or anything like that. We provide you with banners, loan calculators as well that you can put on your website. Because in the eyes of the Financial Conduct Authority, financial advice goes right down to get your boiler for £50 a month. And the reason you can't do those rep examples is because for a customer to get a boiler for £50 a month, it needs to be a £2,000 boiler over 5 years with a 20% deposit at a particular APR. So you're very much steering the customer down a particular path. So in the eyes of the FCA, that's why that is regarded as financial advice. That's why we provide you with a loan calculator and a banner. So you can say, try our loan calculator to see how little your boiler will cost you per month, for example. Customer can click on that link, play around with a loan calculator and almost create their own rep example. So that is one of the big limitations to being an introducer is the financial advice side and not being able to market a rep example to customers.
Yeah, makes sense. And the loan calculator is like, if any of you have ever been on any sort of website, they're like drag and drop, aren't they? Like it's like user friendly, basically. Like anyone can work it out.
And it's tailored to your business, so it's tailored to your offer. You can put your company logo on there, your company name will be on there, so it's very much tailored to your business as well.
Yeah. Anyone else got any other questions? I've still got more, so don't worry if you're not being quiet tonight. Just give everyone a few seconds to see if anyone else wants to pipe up. If you can't talk and you just want to write it in the chat, feel free and I can ask it. But as no one is jumping forward, I'm going to ask another one that I got in mind. So this is, again, I know it's probably a hard question to answer, but the fees, obviously that is what puts a lot of people off of getting involved in finance because they see these big subsidies and they don't want to pay. So where do we stand with, I think you said one of them was obviously, I know the 0% is high, yeah? 0% is basically, if you're going to do 0%, you're targeting a specific sort of clientele with that as like one big offer. So I'm going to forget that for a little while and focus on the more interest-bearing ones, which were like 6%, 4%, I think you said. How do we put that into our quote? How do we build that into our pricing structure? Can you sort of give us any guidance on best practices for that?
Yeah, absolutely. So the first and foremost, you can only ever give the customer one price. So if just say it's a £3,000 job and the customer says, "Oh, brilliant, we'll do finance," you can't then say, "Oh, if you're going to do finance, it's now going to be £3,200. So you can't be, for want of a better phrase, you can't punish customers who are wanting to spread the cost of the job. In terms of building those costs in, it can be done front end, and the interest bearing, the highest one is a 4% subsidy. So if you can, I appreciate it's not as easy as me just sitting here going, "I'll just do this," but if you can put 4% across the board on your prices, then that's the simplest way to start with. I would say some of the work that we do in terms of analysis, between 30 and 40% of customers are taking finance. So if you're doing that 10.9% APR with a 4% fee, if you can just do a flat 1% increase across the board, then on your cash customers, you'll be making an extra 1%. On your finance customers, yes, you'll be losing that 3%, but over the course of time, that should balance itself out. And that's also why we provide that sort of interest, that subsidy-free product, just so people have that option as well. If they just go, "Do you know what? I want to I want to offer finance. I don't get it very often, but customers that do want to use it, I know it'll be beneficial for them. And if I send them a quote, it's no risk to me. I'm going to get all the money. So that's the sort of flat increase of costs, if it's possible. That's probably the best way to do it, because then you're not having to hike your prices up too much. And the same kind of goes for the interest-free stuff. If you're offering the 1 year interest-free, if you can put your prices up by 4% across the board to cover that potential 13%, because the most popular spread of products actually in boilers that we've got is the 12 months interest-free, followed by that 14.9% APR product. Because even just by offering 12 months interest-free, you can say finance available from 0%. That gets people in, it gets people through the door. And then with the loan calculator, it'll start at the 12 months interest free. And then the moment they tick over to their 3 years, they see that the interest bearing finance kicks in, but that monthly repayment drops right down. So they'll kind of see that and go, well, it's not costing me that much more. And it's much more affordable for me. So that's why we see that. And then what those guys seem to be doing is putting their prices up by 4% across the board. So on cash customers, they're making 4%. On that subsidy-free product, they're making an extra 4%. On interest-free, yes, they're losing that 9%. But again, over the course of a year or so, that balances itself out. So you're making a bit extra here, you're losing a bit there, but it'll kind of counteract each other. So that's the sort of best way to do it. But yeah, what you very much can't do is give your customer, here's your cash price, but here's your finance price.
Sure. Did that has anyone got any other questions? That answered my question. So like, just as a side note to that, like our pricing in this sort of industry isn't like, it's not like you go in a shop and you're buying a bag of crisps that's the same price. You know, like every job is slightly different. So, you know, the fees are, you know, absorbed within the price fluctuation of every job.
Yeah.
I found anyway over the time. But the 0%, that's interesting to see. Did I hear that right? That you said that 0% 12 months is the most popular, but then it's followed by the 14.9 3 years. Is that
Yeah,
what you said there?
yeah, because that then, so it'll be 1 year interest free, and then the moment you tick over to 3 years, that's when the interest bearing option.
And the calculator would do that, would it?
Yeah, it
like,
would,
so,
yeah.
so I'd be on the website or the email, and the minute I drag it to 3 years, the calculator's already added that. It's not doing that on 0%.
No, so the 0% will just be 12 equal payments, and then the 3 years will be the 14.9% line. Yeah, and it does do that. And yeah, the reason that is the most popular is because of the ability to say finance available from 0%.
Yeah.
But then also, it's amazing how much that monthly repayment drops when you tick over to a 3 year interest bearing loan. So someone will go, oh, bloody £150 a month or £200 a month or whatever. If it's a £2.5 job, you're looking at about £200 a month, and suddenly it goes down to sort of £80 a month.
Quid, yeah.
It's like amazing that, you know, I can afford that. And the loans can be settled early. There's no sort of early penalties or anything. Generally, what happens is it's 1 month's worth of interest on the remaining balance if the customer wants to settle the loan early. It's always worth contacting the lender to get that figure, but that's the general rule. So if they pay it off early, it's not going to cost them as much in interest if they were to go for the life of the loan. So there's all of those options as well.
Yeah, okay. Interesting. Right, I secured Jono for about 45 minutes, so we're coming towards the end of his part of tonight's session. So if there are any specific questions that you want to ask now's your time. If there's not, I've put in the contact details in the chat, and I'll also put it in the WhatsApp group later tonight as well, so you can reach out directly. Yeah, so last call, guys. Any of you got any questions, or can we let Jono go?
Thanks,
No,
mate.
all quiet. So yeah, well, thank you very much for coming on. Hopefully, a few of the guys will reach out and maybe have some questions or sign up or at least express some more interest. Yeah, definitely.
Yeah,
It's been eye-opening for me, even though I look for it.
Yeah, even if it's just to just go through all of these details again, and if you just want any sort of advice on it or anything, or just any more questions, honestly, please do reach out. I'll be more than happy to help.
Excellent. Right, lovely. I'll
Guys,
let you
thank
go
you.
off and have your dinner, Jono. Thank you very much, mate.
Cheers, guys. Thank you so much. Have a good one.
Cheers, mate.
Cheers.
Bye now.
So we're staying on, guys.
I really hope you enjoyed the show. I just wanted to pull it out there for anyone listening that I offer business coaching, but also life coaching. My life is centered around something called the 3 Bs, which stands for body, business, and balance. When you work with me as a coach, we tackle all 3 aspects of life. So you as an individual, body, mindset, health, fitness, knowledge, education. Business B obviously stands for your business, improving, maximizing opportunities, elevating, making more money. And balance stands for your friends, family, loved ones, making time for everything in your life. And the 3 Bs is the core element to that. If you'd like to learn more, I would ask you to reach out to me on Facebook, Instagram, TikTok, wherever you might be consuming my information. Or you can email me directly at wayne@offthetools.co.uk. I'm here waiting to assist you to elevate across all aspects of life. Have a good one. No excuses. Let's go.